Okay. Some of you joined us yesterday when we were trading, and we took some of the trades based on the rules that I have explained the previous session, and I'm going to revisit those trades right now so that you can see how we apply the rules in live trading, and I will show you how that. Just a quick reminder. Anyway, if you're in London, as I said, what we do is we start our week every week on Sunday night at 7 o'clock London time. We prepare our plan for trading the following week. It's 2 hours, and we record it, and all our traders take the entry points and use them for the next following week. And all the FX Street guests are welcome to attend these sessions, these Sunday sessions, as our guests, free of charge. There's no charge for us. And if you're London, you're also welcome to come and attend the workout session. Okay, so now we're going to go to the just to remind you from what we talked about, there are three market conditions. Now, the first market condition that we have, the three market condition is a trending market, a sideways market, and a reversal market. So we have three conditions, and each condition has to be traded in a specific way. You cannot trade the market in every condition with the same rules and with the same either indicators or techniques. Each market condition has a technique. So in this trending market, I hope you can see the cursor moving up and down. There is a certain technique in trading that market. In this sideways market, there is another technique. And then in the reversal market, so as I said, there are the three conditions. In the trending market, we trade a specific way. Sideways, we trade a different way. And in the reversal, it's a third way. So now just a quick reminder, we have two kinds in a trending market. Quickly, there are two kinds of moves. There is the impulse moves, and this is very important and very key because they are the ones that dedicate the direction of the trend. I want to see momentum. I want to see an impulse, because that is my key that I am entering into a trending phase. Because once the trend begins, we really don't know if we are in a trend or not. And you can say, okay, we're still in a sideways pattern. But the key, the evidence that we need so that we know we're getting into a trending pattern is the momentum or the impulse. And then they're followed by the corrective wave. So if you look at this, that here, right there, that is your momentum. And that is our first indication. Once we see this, we know now that we're getting into a trending mode. Once I see this, I know I'm getting into a trending mode. And now I only need to be a buyer. After each trending mode or after each impulse mode, we get into an equilibrium zone or a sideways zone, and we call them, in price behavior, we call them price acceptance zones. Because the traders begin to accept or realize that the new price is now the fair market price, and then the market gets into an equilibrium. Then there is a new phase of demand that comes in, a new imbalance, and then we get another impulse wave, and that's where we want to be in the market. We always want to be buyers in the impulse wave. So just to remind you quickly of what a trend is a series, and the operative word is series. So I'm getting, once I'm in a trend, I must have more than one high and more than one higher lows. So I must have more than one. The key is, at this stage of the game, which is which. And in a downtrend, I'm getting a series of lower lows and lower highs. Again, the operative word is series, i.e. more than one. One high does not make a trend. One low does not make a trend. So if I have a trend like this in an uptrend, that creates for me two rules or two ways that I can trade this uptrend. If from point A, the starting point, and I begin to get this as an impulse wave or a momentum wave, and I'm going to show you all that on a chart right now. I get this as an impulse wave, and then it begins to correct to give me a pullback to the downside. That creates for me two entry points. This is where we say secondary trend. This is in the reality the price acceptance zone, where people begin to accept the new price. And now I have two entries. If I can buy around the higher low, and there are many techniques traders use, let's say some people would use a retracement, some people would say I'm going to use a whatever, or some people just simply attach a value. Let's say if a stock goes from 50 to 100, and say if the price comes back down to 75, I am going to buy it. That is what creates the higher lows. So when we attach a value that this is a good fair price, then the prices will again stop declining, and then a new more demand is going to come in, and then we're going to push the prices higher. So now I have two entries. Either at this higher lows, and that is what creates the higher lows that we all want to buy, or when the prices move up and take out this higher high, when they take out this momentum high. So I have two buy areas, either above the high, above the first high, or when the market settles and stops declining and begins to move to the upside. So above the high or at the low. Also, again, I will buy above the high or when the market makes a low. And then in the third thrust, after the third momentum, when the market comes down and it stops, that now is the higher low. I can try to buy there if I am proficient or I can identify that. Or worst case scenario, when the prices take out this high. But I need to buy at least above each high or when the market sets down. Now, yesterday we were trading live, and I will show you how we traded this setup yesterday. Somebody was talking right now a few minutes ago about the pound Swiss and the Swiss that is happening. So let me show you that in a second. That just a question, moderator, please. Can you see my TradeStation account, my TradeStation charts, please? Yesterday, for example, all right, these are the, what is the pound Swiss? Okay, here's the pound Swiss. And now I want you to follow with me quickly the basic rules of when we begin to trend and see how we're going to trade. So right now, this was yesterday. We were trading this yesterday. And remember, we were talking, when I was talking with you the other day, one of the things that we are trying to do when the market reverses is to identify where the traders, the majority of the winning traders, are going to reverse and get out of the market. Now look at this, guys. See this here where I have the cursor? That move to the upside, that is a steep move. You can see that it is slightly perpendicular, close to perpendicular to the upside. That is your first sign of momentum. That is your signal that now you're getting into a trend. Once you see that move, you know now that what? That now you are in the beginning of a trend. That's number one. Two, that you should be getting a series of higher highs and higher lows. Okay? And now you must be trading in the direction of that momentum. You only want to be trading into that direction. You want to be a buyer. Now, with that, and I would show you these live trades. We took these trades live in front. Most of you were in the room with us yesterday, and we were trading live in that. And if any of you want to come back into the room, we open it once a month. The next room is in November the 10th. But anyway, so with that here, as you see, this is where the market has stopped. Okay? And just trying to get... So anyway, I'll take this line here. And this here is my momentum high, because this is where the market stopped and the market was coming down. So now this, the 162.20 becomes my momentum high. And now I have two trades. I have two entries. Either to buy above the 162.20, if the prices come back above the 162.20, that's a buy. Or I try to buy somewhere around here. And as soon as the prices get above the 162.20, that is your second entry. Now you're going to buy again, and that is your trade. Why? Because we have identified first the market condition. Two, we have identified an entry point. And now we're trading in the direction of the momentum. And here is the trades. And as I've been telling you, the short-term software that we use, exactly that's what we need, is to keep us on the... It doesn't matter the time frame. A chart is a chart is a chart. That's it. If you're trading at a 1 hour, the same setup is going to appear. If you're trading at a day, it does. Is a black screen now, or are you seeing the chart again? Okay. So right here, I'm going to space it so that you can see the entries. And I want you to see how the trades are taken by us and by the software. That's what you need, the automated system that follows your rules and you understand what it does. This is how traders are making money today in the market. Okay? There is no indicators, exactly what I'm explaining to you. So right now, when the market reverses and goes up, I have momentum, then I'm a buyer. So we buy it right there. That is your buy signal. And as soon as the momentum keeps on going, the momentum stops, it comes back down, you close the trade because the retracement is a little bit too strong, and that is your winning trade. Now, I told you if it gets above 162.20, we need to buy it again. As soon as the prices push and go above the 62.20, I want you to read here what the software says. Trend resume. The upward trend now is resuming. I'm in the momentum. I'm in the direction of the trade. I have to buy it again. And you buy it again. Right there. That is your buy. That is your buy again. And the price is the only thing we use. Nothing else. Everything else is your Achilles heel. You identify the market condition, you trade into and you trade into and you have a set of rules. These set of rules is going to keep you honest with the trade. And when you have something that follows your rules like this, it will take away the emotion. Right here, everybody would be scared to buy. Okay? But if the software says, now you have to buy because now you're following the market condition and you take the trade, that is the second trade, and that is right there, and it keeps you in because now this becomes your new momentum high right there. And if it gets above this second move, you want to be staying into the trade. And right there, it closes the trade because it is the end of the session. Now, The first buy, this is another story. I'm going to get into the first buy because that's the reversal. That's what we call the failure trade. We have 4 sessions, guys. So just be patient. I want to show you again how you must follow the rules and you must identify the market condition. Okay, what I'm doing with you here is the new wave of trading, and I want you to understand. Okay, and I see it with your eyes. There is no other way that I can show you that. So I'm going to type in what I'm going to change is only the symbol, no formatting, no optimization. I'm only going to change the symbol. I'm going to put here the pound yen. Okay, so it went black the screen now because it's picking up the data. And I want you to see the same rules. Now we don't do the 1, 2, I don't know what 1, 2, 3 reversal is, but maybe you're right. I don't know what it is. It could be. There are many names for the same things. I think it's salsa, you name. But again, there is no secrets in trading. Trading is very easy, but it's not simple. Or the vice versa. Trading is very simple, but it's not easy. Why? Because our emotions get in the way. Okay? So take a look. For example, this is today, but I want you to see yesterday again. This is yesterday. That's the first momentum. You see the momentum right there? And once the software has a little bit of ability that identifies the momentum sooner for us, so we get into the trade. Now you get your pullback. Okay. But right here, right there, that is my momentum high. That is my momentum high. And that means what? It means that I want to be a buyer as soon as the prices get above the 142.10. That means that the trend is resuming to the upside. Once I see this, I am only focused on finding an opportunity to buy. And once it begins, then the trend again to push in the same direction of this, the software will say, buy me again. And it will tell you, trend resume. And it takes you again, this is your second buy. Right there. You and I, we would be kind of scared or say, oh, should I take it or shouldn't I take it? It's too high. The price is too high. The price is too low. You don't think when you're trading. You follow the rules. There is no guts in trading. You follow the rules. And the software takes you again, and it keeps you in with the momentum. As soon as it closes the trade. Now you get the third momentum move to the upside. Look at this. That's right there. That's the second momentum high. So if I have a trend, I have a series of higher highs. So this is high number 1. Let me I'm showing you this because I want you to be taking those trades. This is how we trade, and this is how you trade successful. So this is high number 1. Right here is exactly, you should buy at momentum high number 2. Momentum high number 2. Right there, if it takes out momentum high number 2, you want to be a buyer again. Now, how many of us would have the courage to buy it right here? I will show you, of course, losing trades. Absolutely. There is no, but just let's finish on this. Let's finish this. Let me put you on the right side of the market first. Then let me give you the stops. Then let you get you out of the loss. Okay? Let's get you on the right side of the market. So right now, this is the issue. If you see momentum here and you see momentum here and this begins to push up, you know that is your momentum low. That's your momentum low, 142.40. And right there, when it picks up one more time, the software says, go in. And the software is not magic. It is telling you exactly what I have explained to you on the 3 market conditions before. Okay? That's it. If you can do this by yourself, you don't need the software. The software just takes away the emotions out of the trade and says, no, do not go short, go long. This is the right way to do it. And right there, he gets in for the third time, and it keeps you all the way until the session closes, and it closes. So once, and that is your momentum high number one, that is your momentum high number two. Can you hear me now? And right there, that is your momentum high number three. And that is how we trade in the direction. Now the mic is on. Everybody do you see that, guys? Now I'm going to show it for you one more time so that you can appreciate that this is the truth. This is the way we trade. I'm just going to take that. I'm going to put another symbol. I'm going to put the pound dollar right on the chart. And you will also be able to see, and that the reason I'm saying this is that people find it extremely hard to trade when there is momentum because they fear that the prices have gone up too fast, too high, and too fast. And they would say, it's too high, I cannot buy it. I think it's going to come back, and the screen is black, so don't worry, it's downloading the data. No, it went up too high. I cannot buy it because if I buy it now, it is going to come against me. Fair enough. But in this case, there is a way to trade it. You say to yourself, I'm not going to chase the market on the high. So that is now the momentum. The pound dollar, both of them are weak, but again, it's the same rule. That is the momentum high. So I'm not going to buy it over here. I'll wait until it comes down somewhere and it stops. And as soon as I have a first winning trade, and you see that the price is beginning to move up again in the same direction as the momentum, you see, the common denominator, guys, is that perpendicular move. Look at this here. I could have said, if I'm not using the sessions, I could have said this. That is my, excuse me. It just scrolled up a little bit. You could have said from London session that yesterday, that for example, this is my momentum high in London. So now I'm looking for a higher high. You did get your second higher high. Well, yes, it could be a candle. It could be multiple candles. All what you want to see is this perpendicular move, guys. I'm going to put a rectangle on this perpendicular. That's what you want to be looking at on the chart. Hold on. And the best way for you to identify momentum, I'll give you a secret. And this is a tool that every single one has, and I'm going to give it to you for free. It's a gift. The best thing that you need in order to identify the momentum is your eyes. If you can see this, believe it. If you see this, believe it. This is where you want to be trading into that direction. Wait for the pullback and try to trade into that direction. Okay? All right. So, and it's as close as vertical as you can get. Okay? I mean, vertical is not, the gift is another story. I mean, I'm going to get into the gift. This is one of our trades. We call it the gift trade, which we discussed yesterday, but we're running out of time. But again, so now you have seen, I showed you 3 live trades where the majority of you were with us in the room yesterday and saw us take those 3 trades in those 3 pairs with live money in front. And why? because that is the rule. The second thing, and I hope that most of you that were with us yesterday can recall this, is all the traders that were with us in the room, and everybody in the room is trading live, we were all talking the same language. Nobody was saying, I think this is, well, you're welcome to come next time, or, we were all talking the same language. Everybody's looking for a momentum high. Everybody's looking for a gift setup. Everybody is looking for a failure set. Everybody knows the rules. The rules are articulated, well-defined, 21 rules, and everybody is following these rules, and everybody is getting in pretty much close to the same time and getting out approximately to the same time. And this software is your autopilot. As I said, there is nothing magical about that software. There is no voodoo, algorithmic Yankee Doodle. The code took us a great deal of time to write it, but the rules is exactly that, has been in this market for 5,000 years. You have a trend, it's a series of higher highs and higher lows. You want to be trading into the direction of the trend. Okay? And you also have to understand that the last trade is a winner, guys. The one thing, just let me finish what I'm trying to say. I don't want to lose track of what I'm saying. Now, the other thing that if we are going to have a trend, I will give me exactly 15 minutes, and I'm going to answer all the questions, guys. I'm losing. All my presentations are. I really don't know what I'm going to say next. I know the titles of what I'm going to discuss, all our teaching and presentation is based on live charts. So I don't usually use too much PowerPoints because I want you to experience the live situation. Don't worry, Scott. I want you to experience the live situation. All of you now are going to remember these setups that I showed you. All of you now are going to remember the momentum, and you can see that if you took that trade in the direction of the trade 3 times, you would have had 3 winning trades. 3 out of 3, Splav. 3 out of 3. When you have something that gives you 3 trades, winning trades in 3 times in a row, that's the way you want to be trading. Okay, I will show you losing trades. Don't worry. Just relax. Now, today, you got this momentum move to the downside. You take the trade, and you said, that is this morning. That's the trade this morning. It went short the pound yen at 142.29, and it closed the trade at, I can't see it from here, at 142. You got 50 pips on that move. The stops are on the other side. That's when you see when it fails, it says fails. But anyway, I'm not doing this to show the software. I'm trying to tell you, I'm showing you this so that you can see the trades that follow the same set of rules. Okay? Now, the second thing that you have to understand when you are trading is this. I'm going to go to a PowerPoint now, and I'll come back to this in a second. Do you see the PowerPoint, guy, where it says know where you are? I just want to, okay, perfect. Thank you, champion. Now, this is, again, I showed you initially the price anatomy. Then a second part of the price anatomy is what we call the structure, the wave structure or the price structure. Okay? It is not Elliott wave. It is not Mr. Arcox81, I'll answer your questions in a second. If you could give me 10 more minutes, and then I'm opening it to questions, please. The idea is you have to understand, if I am looking from point A to point B, all this distances, that is, I can say that this is my trend, where I have this black line all the way up. But on its journey to the way up, okay, it doesn't move in any straight line. It zigzags to the way up, and then it comes down. It zigzags on the way down, and then it zigzags on the way up. People say, I was talking to somebody yesterday, and I said, I was talking about the price action, and he says, well, the price action, the one thing I can tell you for sure about the price action, that it is unpredictable. Okay, I will give you 2 minutes, and then I'm going to start the question. Okay, exactly. He says the price actions are unpredictable. Do you guys agree with him? I'm sure all of you would say, yes, the price is unpredictable. And that, guys, that unpredictability is what makes that move predictable. You can be, the 100% that the market doesn't move in a straight line makes it predictable. If it's going up, it has to stop and start coming down for a little bit, and then it's going to go up. That unpredictability that is absolutely guaranteed by most of us, in most cases, there is no 100% of the time, makes it predictable. Then I can tell that this thing, it is going to come down a little bit, and I can find an opportunity at point number 2 to buy it into that direction. But what makes me buy at point number 2? I have to know where I am in location to the chart. And how do I do that? I'll go back to TradeStation and I'll show you how we do that. Do you see TradeStation, guys? Yes, no, maybe? Okay. Now, if I take a daily chart like the one over here, and I don't use indicators, but I'm just putting this indicator for you, and you see now that the prices are moving up. Let's take this area over here. Let's take those days from here. From here. Okay, I swear to God, I'm going to open the chat for in a minute. I swear to God. Just give me 2 minutes. If not, I mean, I think the lovely people in FX Street can give us 5 minutes for the chat. No chart. Okay, I'll put it again. How about that? Good. Now, as you see, once you can see that those first 3 days, that you can have a move to the upside. Okay? Okay. Okay. But it goes up, it comes down, and then it goes up again, and then it comes down, and then it goes up. So what we should be doing is, if I can see this, look at this. This is how we read the chart. This is how we read the chart. Starting from here, that is your, we can call this a momentum move. You can make this a momentum move. And since this is a momentum move, and you can see those big candles, big green candles, all positive candles, now this is your momentum high. So with this, guys, if this is the setup that you see, and you're asking yourself right there, here, what is I should be doing right there, this is the pieces of the puzzle that you need. You do have momentum to the upside. You have a momentum high. Right here, now you're looking for any chance to be a buyer. So this is how, what I mean is, know where you are on the chart. Now it begins to move into the direction of the momentum. You want to be buying it over here because you know it's going to push, because this is your momentum. It is going to go and take out this high. So now you have another 1 or 2 entries. You're going to be a buyer above the 148, or you're going to be buying it right here in the direction of this momentum so that you can take that trade and make your money. And that is today. I'm not making that up. I'm not bringing you historical pictures so that you can see what if, should have, I should have, could have, would have. This is today. Okay, now we have 2 more minutes, and so now you have seen how we trade the momentum market. We first have to know where we identify the momentum, which direction it is. Then we identify the pullback, and now we want to trade. Either I buy the momentum high, or I wait for the pullback and I buy in the direction of the trend. The toughest part in trading, guys, is sitting on your hand. Most of the guys that were with us in the room while we were trading yesterday, we took the trades in, and it just sat there for about 10 minutes, and some people were getting edgy. Should I get out? Should I get this? No, you are on the right side of the market, and then now I want to be trading in that. You just have to sit and give it time. Look, I'll show you another trade today. This is the Euro Yen. We were trading the Euro Yen today, and look at this here. This is today's trade. Now, right here above the 132, right there, that is your buy signal. We did buy it over here this morning, and it came back, and we were kind of angry about it because it just took us like an hour or so. It actually took more than 2 hours. By 10 o'clock, I said, okay, this is just a waste of time. But I want you to see what would the software do if it just keeps you on the right and narrow, and you stay in the trade. So this is the London session, because you don't need to be trading every session. Your computer is going to eat it up. It's a process. It's already in the recording, Chapel Bob, or you can come into, I will be happy to give it to you. So right there, look at this. That is as soon as it broke up, that is your momentum. You want to be a buyer in, and you stay into that trade. Look at this. Now it's coming. This is this morning. This is this morning. No, I'm not saying the London session is the best. These sessions change. They're not all the same. Sometimes the sessions are, the Tokyo sessions, it oscillates. Sometimes London session is the best session, and the New York and Tokyo are dull, and sometimes the Tokyo session is the best. So you just have to see what is they're not all, and look at this. As soon as it took the high, there's your momentum high, right there. You see this? Now, worst case scenario, if it gets above 33.15, I'm going to buy it. This was this morning. Look at this. This morning. That, guys, look at this. from 33.15 to 33.80. That's 75 pips. That's $750 on one contract. Now, I hope you believe your eyes. And that's the way to trade. Forget the moving average and blah, blah. My stop is usually on the other side of the range. I mean, the way we pick our stops, they change every day. The ranges that we identify in the morning, what we call the ranges, they're a combination of several things. They basically tell us what the stop is for the day for each pair. So, for example, for the euro pair today, the euro yen, my stop was about 25 pips, 20 pips. So you just give it an extra 5, so it's 20. So you're risking 25 to make 75. Okay? Now, last thing before I open the session to questions. What do you think is the toughest thing in trading? Why do you think that the majority of traders are having a tough time trading? Patience is one, emotion, mental, fantastic. But in addition to that, guys, they do not think about probability. You always have to think about probability. And the probability means that you have a set of rules that work more times than not. If you have a set of rules, then you will develop the confidence. Because the more you follow this, like I showed you today, this rule about momentum, I'm sure every one of you here now, when they see that perpendicular move in the price, they are not going to go short and they are not going to look to be sellers, but they will look for an opportunity to buy. Why? I have shown you evidence that this has worked not once, not twice, not 3 times, on every single chart, live data that it does work. Okay? Now, if you are coming into the market right here, guys, this is where we are right now on the screen. We have 3 options. We can buy, we can sell, and we can do nothing, right? What are the odds of us making money? 1 out of 3. If we buy and it goes up, we make money. If we buy and it comes down, we will not make money. If we do nothing, we are not going to make money. So our odds for us to make money, whenever we're looking at the chart haphazardly like this, without having any rules, is 1 out of 3. That is 33%. And the odds of us not making money is 66%. That is a lousy deal. That is a lousy hand to play. Why should I get into something that I lose 66% of the time and I only win 33% of the time? But if you have a set of rules, guys, that says this, that this is what you see, that's what you see right there. Do you see this chart, this perpendicular? Now you see this, your odds are, your choices are to buy or to do nothing. Selling is no longer an option. Just by that rule, ladies and gentlemen, you have now 2 options. Your odds of success has now become 50-50. So I just increased your odds of success by 16 points, and then you take it above that. Okay? Right. Okay, so now we're done, okay, for today's session. As I said, you are all welcome. Every one of you is welcome to come to our Sunday session where we do that live and preparing our next week. So again, for as a courtesy to FX Street, we are allowing everybody to come in to this Sunday session completely free. Just go to Spyglass and register for the week trading planning session, and we will send you the invitation. And it's a 2 hours at 7 o'clock London time. And so now, 7 o'clock London time. Now, in Asia, so just 7 o'clock London time. I mean, 7 o'clock p.m. London time. Okay. If all right. Well, anyway, here is. I will put my email for you. I'll put this email for you here. Send me an email. Anybody that wants to come in, send me an email. Okay, this is my email, info@spyglasstrading.co.uk. Send me an email there, and I will make sure that you get an invitation. So it's info, and yes, you're all welcome to come in. Now, anybody has any questions about the stuff that we have been talking about today? Somebody was saying mass psychology, that support and resistance turns support. Okay. Now, here is the point. Now, some people would say, I want to buy support and I want to sell resistance. Is this a good thing or a bad thing? Is this right or wrong? Don't be scared. It's a trick question. We calculate the ranges. Now, we don't use, listen, I want you to understand. Okay, let me answer these guys first. You only buy support if the market is trending. If the market is trending, you see, your first job is to identify the market condition. If the market is trending, then buying support and selling resistance is a bad policy. It's suicide. Because you're you're selling the momentum high. Look here, you're selling the momentum high, and this thing is going to fly on your face. Boom. That's suicide. But if the market is in a sideways pattern, then buying support and selling resistance is a very good policy. All right? Now, how far do I expect the prices to retrace? This, absolutely. Absolutely. Take a chart on any time frame edit and go back, and whenever you see a momentum high, put a line that you are buying that momentum high, and find out how many times you would have made money and how many times you would have lost money. Okay? And that is your answer. I use stick charts because I'm trying to find out a combination of two things. I'm trying to find out, this is the software that we were using on the floor and we have developed and we're using now in Spyglass. And it's so it's basically there are two softwares. One for the intraday, which basically plots what we call the daily ranges and the structure points, and it identifies them for you like this. And it gives you points where you can identify the everything that we use in this software is psychology and based on price behavior. There is no moving averages, there is no stochastic, there is no any indicators. It gives you, for example, zones of what we call where the market psychology behaves. Somebody was talking about the mass psychology. So for example, over here, I'll show you, for example, one second, one at a time, guys. If you look at this chart right there, coming up, give me 1 second, I'm just moving it quickly. So right there, now I gave you a rule that momentum precedes price, and that is my momentum high. This was the previous momentum high where I have this red line right there. That's the previous momentum high. Now the prices took out this high, so I should be a buyer, and you buy it over here. So now where would you guys realize, let's say we all did buy it over here. All of us did buy it over here. Why did we buy it? Because it went above this momentum high. Okay, so where can we realize that we made a mistake? I will realize that I made a mistake if the prices does not stay above the momentum high. And no, you don't let, or you don't wait until you get stopped out. You must have, no. You have to have a reason to get into the trade. RCOX 81. You have to have a reason to get out of the trade. And the rule is, what gets you into the trade gets you out of the trade. You buy it for a reason. As long as that reason exists, then you stay in that trade. If that reason ceases to exist, there is no more reason for you to be into that trade, you get out. So we buy it over here because it went above that momentum high. If it fails and comes back below this momentum high, this means all the professional traders now have no reason to stay long into the trade. Then they say, I'm going to get out, so they are going to sell. And some traders, the real good ones, they are going to reverse. So at this point, when the prices come back below the momentum high, several things will happen. The ones that went long are going to sell. Some people were selling this as resistance, so you got two sellers. And then some professionals are going to go short. So at this area, guys, when you identify this, what is the volumes of selling? Are they the same volume or more volumes of sellers? I just identified for you three groups of sellers. The ones that are getting stopped out or getting out, the ones that are reversing and initiating a new short, and the ones that are basically just going short. So you got 3 times as much sellers. So if I'm having, I can expect what? Exactly. So what do you expect to see here, Adit? Capitulation. Because why? This is a price behavior, a failure. Take a look now. This is today. I'm not making this stuff up. Right there, you want to be short. For no reason but because of the failure, and that somebody was asking about mass psychology. There you go, pal. That's this morning. Everybody's scrambling to get out. And you could be there to take their money. So these lines, that the software, I don't know, I don't think so, but you can use it. I mean, I think you can use it on, just call the tech support in the office here. I'm sure they can answer these questions. But we use 2 platforms. We use TradeStation and we use multi-charts, and you can execute with any broker. It doesn't matter. I use thank you, sir. I use the tick, as I said, because we are trying to find the actual trades. I mean, sometimes you would have on a 5-minute bar or a 10-minute bar or 15-minute bar a spike. And that spike can take away the actual, it could be just one guy with a big trade. We call it a fat finger. I mean, he just stepped on an F10 or something and he got a big trade. So it just could be one or something or whatever. So we need to see that there is actually volume coming into the market or number of ticks that's happening within a certain period of time. And that's why we use the tick. And the reason we are using all that stuff, guys, is one thing. Most of the programmers today, and I'm sure some of you guys program stuff and write code and how to trade and stuff like that. What they do is they would say, okay, if I have, I'm using a 15-minute bar, I'm using, if the moving averages crosses that other moving average, if the Bollinger Band shrinks and does that, if that does that. So all these guys are taking the variables or the codes that are existing in the market because they don't know anything else. They have no way of understanding this stuff. They only know whatever indicator's there. They can read the code of this indicator and they can make the assumptions on that. Or they can use a Fibonacci retracement, a 38% or a 50%, whatever. So they're using the same tools that you are using. And they're using these tools against you. They have more money because they are banks and programmers and stuff like that. And they're using those indicators and they're testing them and all that stuff. And they're using the tools that you're using to make a decision. They're using it and they're turning the table against you with these tools. So if we are going to stay in this game, we have to go back to the basics, back to the market reality where they cannot play that game. And now the way we used to trade many years ago is just looking at the trend, looking at the momentum, looking at human behavior, looking where people buy, we're looking where people sell, we're looking where people change their minds, where people reverse and go out of a bad position, where they go and put more position. That is, those behaviors of human behaviors are basically what price behavior is, because you and I are the ones that create this behavior. And that's what this software where we're able to do is to identify those zones, and we can, and exactly, and that's why we put these codes in here so that they take away these emotions and they back us up when we have to buy now the new momentum high and the new momentum high. All right? Yes, you follow the momentum, not the candle. The candle high, follow the momentum. Follow trade in the direction of the momentum. Yes. Fibonacci discoveries and harmonic. This is way stuff. The harmonic stuff is way beyond my. It's way over my head, Kagra. This is high intellectual stuff. I'm a poor soul. I know what I know. You're very welcome to join us. RX81. Just send us an email. We'll tell you our theories. And we follow, we apply these theories into practice. This is practical stuff. It's not theory, but you're welcome to join us. Yes, somebody said a good question a minute ago, said that this means that I want to be trading the volatile market, and Boyke was saying now is that it only trades 20% of the time. Both of you are absolutely correct. If the market, one last thing before I don't want, a moderator, whenever you want me to stop, let me know, I'll stop. I'll take you to one thing here, when you're trading, okay, and where are you going to make money? You only mean, no, I understand, Kagra, no, I didn't mean it. I'm talking humbly to you. I can talk to you about things I know, and I can talk to you about the Fibonacci stuff, but all what I want, Kagra, is to show you how to make money. Yes, I will teach you the sideways market, but one thing. You want the best time where you're going to look at this chart here, the trade station chart where do you think you will be making money? Would you be making money here where I have this, in this area? Or you will be making money in this area? Obvious, you're making money in this area. So absolutely. If I am trading this area over here, I'm going to get chopped out. So I am trying to find this. And the beauty of the market today, guys, in the foreign exchange, is that you have 18 basic major pairs. Okay? So if every one day, one or two pairs move, these are the ones you want to be in. And if the market is not moving, you don't want to touch it. This is like a market that has a flat AKG. It's dead. Why do you want to have a flat AKG? You want to be trading when something is moving, as long as you know how to control your risk, as long as you identify your exit point, and as long as you stay in the direction of the momentum. And if the market is moving 20% of the time, Boyki, well, you have 18. You have 18 pairs again. So this means that you have one or two pairs moving every day. Good for you. That's enough. One or two trades a day. Make a 50, 60 pips, 100 pips a day. God bless you. You're done. If you take 2 trades a week, you're done. You don't have to trade every day. The idea is making money. Make money. Find the opportunity to make money. You do not have to trade. You do not live to trade. You do not live to trade. You trade to make a living. You trade to live. You don't live to trade. These are the zones, or what we call the ranges. They are a small component of what we do. The failures are the best trades in the world. These are certain ranges that we have identified, and we do them in a combination, several ways to calculate them. We calculate them in a combination of ways. That's why they are not equal. You can see that they are not equal in size or in width. You see, for example, here it's very narrow, here it's quite wide, here it's wide. It varies from one session to the other, and we calculate those in a combination of time, volume, number of trades, stakes. We have done this as part of the way we calculate that in the software, because it helps us to identify the better trades. The better rule of how to sit on your hands is you stand up, put your hands on the chair, and then come down and sit on your hands. Okay, guys. That I want to thank you, and as I said, you are welcome to join us. To me, I have, I'm sure if you know, but to me, I've got used to it. To me now, if I don't use this software, to me, it's like I feel like I'm naked, if you will, and that's not, it's just, to me, it has become such a habit. If you look at this chart, right here, for example, without anything, you can see that this is momentum right there. I want to be a buyer somewhere over here, and I want to, take it to the upside. And you can see, just look at this, moving up. Look at this. But for me, if I put my lines, what we call the key lines and the reference points and all that kind of stuff, to me, I can read the chart now with much like an open book. And I can tell you exactly what I'm doing at every time. And that's it. Oh, thank you, sir. You are very kind. All right. Anyway, thank you all. Yes. What's for C1K? Exactly. Is that the only thing, Edit? Oh, you broke my heart. I was hoping I shared with you some more stuff. They are in the recordings. I mean, you can see them last week. They're in the recording of last week and today. And anyway, we're coming next week. And yes, Jeff, we're coming in next week. And next Wednesday, we're going to do the sideways market. And then the following week, we're going to do how to identify the reversal, how to know that the trend is changing from down to up or from up to down. All right, guys. Thank you very much. I appreciate it. If you don't have text, use about 15 minutes, Boyke. Anything less than that, then you're trading against a computer. Okay? The 5 minutes, the 3 minutes, the 2 minutes, the 10, up to the 10 minutes, you're trading against the computer. And that is, again, you don't have the edge. You don't have the advantage. Okay? You always want to trade when you have an edge, when you have an advantage. If you don't have an advantage, don't trade. You're giving your money away. So it's like, I want you to think as if you're swimming, like no, I don't want you to lose money. It's much more fun making money. When you're trading, I mean, you'll be walking on air. When you make one good trade, and not just because it's a lucky trade, but if you something like this, you identify the momentum and you do it right and you see the rule and you take it and you get paid like this, the joy of that trade is priceless. You will be walking on air. And if you don't follow the rules, you will know exactly why you lost money and you will kick yourself. No, just follow the rules. I mean, follow the rules. Set your rules and follow. Just follow the momentum. Identify the momentum in the markets, in the currencies that you're trading, and just follow that rule and be patient with it. Okay, guys, any more questions or we're done? Don't be a contrarian. Hey, guys, believe your eyes. Believe your eyes. We're going to do that next week because it's a whole topic, point, Tom. We'll do it next week. Well, basically, a tech chart in a way is a timeless chart. What is TF? Point and figure charts, they're excellent charts. They're one of my favorites. I mean, this is how I started learning trading, was with the point figure charts in the old days. But they're more for the longer term if you're identifying a trend, if you will, or staying in the long term. Can I repeat what I said about time frames? What did I say about time frames? when you're trading about 10 to 15 minutes is good enough. Okay. If you want to go bigger, the bigger the time frame you use, the more advantage you have. But the drawback is that you have to use a bigger stop. But in this case, use a smaller position. The small time frame is, as I said, it's mostly for the big computers, the bankers, and these guys are coming in with. It's not our piece of the cake. Let them have that piece of the cake, and we take our piece of the cake. So use between 10 to 15 minutes as a starting point, and then find the other time frame that suits you. All right, guys. Thank you very much. Good night, and see you next week. And if you need anything, you can drop us a line at Spyglass Trading, and I'll be happy to answer your questions. Okay? Thank you very much. Happy trading, everybody. FX Street, thank you very much.